let's start off with your rating and your price target on Salesforce ahead of earnings.
We're currently neutral rated on Salesforce. I think you captured it very well. If you look at the stock move, it's up 60% year to date. And you're right, a lot of that move was on the back of an activist push at Salesforce to really become a much more efficient operating margin company after years of really not having focused on that at all, having been a company that was growth at all cost. Recall, it wasn't that long ago that this was, a $20+ billion company with teens operating margins. Those operating margins are now approaching 30%. The activists are now largely gone. And I think, as you alluded to in your opening remarks, we believe that the focus will begin to shift and is shifting now towards revenue growth and what Salesforce can do there. And you mentioned the CRPO guide, which we think is built in some conservatism for the quarter. But I think the big question is Salesforce going to be a double-digit to teens grower, or is it going to be something slower than that?
All right, I want to point out your price target's 210. The stock's trading at 212 right now. So you see clearly the stock either moving sideways or taking a dip and maybe popping up later. What's the path for Salesforce? And important to note, its annual, I don't even know what you call it, event, convention, Dreamforce is coming up very shortly.
Yeah, sure. Dreamforce is, you get to spend some time in San Francisco with 200,000 of your close friends. That's coming up in a couple of weeks at Salesforce's annual event. Salesforce, just to note, will not host an analyst event this year where they will provide long-term forecasts. They typically do. So the quarterly reports are going to be the times when we're going to get an update. And I think really the key here, and again, you alluded to it, Frank, in your opening remarks, is around what the growth is going to be. And I think the drivers there, as you mentioned, are going to be certainly the price increase, but also AI monetization, which we can talk about. Now, those are going to be offset by the macro, and it is a tougher macro right now. Despite what we're seeing in the stock market, sales cycles are still longer, deal sizes are smaller across enterprises. Right. And those are things that are headwinds for Salesforce because they are a large deal company.
All right, so let's just get right into it right now. What's the demand picture when it comes to Salesforce? Is Salesforce genuinely a bellwether? Is it a read on the broader software as a service market? And then what are you hearing about this adoption of its monetized AI products?
Yeah, great question. So I think the thing with Salesforce to keep in mind is that Salesforce is a tremendous innovator in the history of SaaS and software, because Salesforce is one of the first companies to prove that software can not just be about creating efficiencies, but also about driving revenue. And Mark Benioff was really the pioneer of that concept, which when I began my career was by no means even thought of as something that was possible for software. That having been said, when you get into a tougher time, more of your discretionary budgets are at that front office within marketing and in sales. Now, if the economy continues to improve, we will see dollars go back there. To date, we really haven't seen dollars go back there. And so that's where the street is really wrestling right now with, you mentioned that CRPO number, that's at 10%. We do believe it has some conservatism built into that. But top line growth is really the focus, and Salesforce is a bellwether for growth and investment dollars being put into the industry.